Hello everyone, it's Joe from Bullion Now, bullionnow.com.au, selling you the best bullion bars and coins shipped to you worldwide from Melbourne in Australia. This is another precious metals price analysis where we take a look at the big four: gold, silver, platinum and palladium. It is Tuesday the 22nd of September in Melbourne time, that is Melbourne in Australia. Of course, head over to youtube.com/bullion now, check it out. 7,340 something subscribers. We've hit a little bit of a milestone. I don't know if you've seen our a couple of videos before. We talked about a little milestone. We beat another company. We'll say that one. We're very happy about that one. And we're just going onwards and upwards. So you know what we should do. You should do, I should say. Hit the big red subscribe button right there. I think 10,000 by the end of the year is a pretty good goal. So help us get there. All right. Gold. It's been a number of weeks. Again, apologies for the not weekly analysis. Very, very busy in the store. Very, very, very busy. But I've got some time now. So let's check it out. Gold. This is gold on the, where are we? On the daily time frame. We're using the tradingview.com website. It's priced in US dollars. We're currently hovering at about 1,910 US dollars. Let's go back a little. Let's take the weekly. And last time in my previous video, we had yet to hit the peak here of 2,075, I think it was, on this particular market. It was, yes, 2,075 and 14 cents in US dollar terms. Around about 2,030. So we had broken through the $2,000 range, and we were talking about, you know, potential up targets and down targets. Well, we did see a big dip. You'll notice it came down all the way down to, it's the 18 average of highs. I've talked about this, the 18 average of highs and the 18 average of lows. I find it a pretty nice little metric myself. And it came all the way back down to there. And then we've just been consolidating through time. And until just recently, we've just had this little dip. So what you can see here, we were actually trading in a bit of a range. It was there. I had that drawn in, and I think it was this one drawn in about there. So we were needing to make a decision. And what happened was it was actually a fake out. Certainly was a fake out, because I thought, well, we're going to range through here and then it might make its decision around about here, but it made the decision earlier, well, what we thought. And then it broke out and I thought, okay, well, look, we might be heading up from here. And but no, it was a fake out. And oftentimes from a failed move comes a fast move in the opposite direction, and we've certainly seen that. So down to, where are we? A low of $1,880 so far. I say so far because there could potentially be room to move down. Of course, you know, don't have a crystal ball, so we could certainly head up from here, but we'll talk about the different areas which I think are support and resistance. Of course, you know, none of this is financial advice. I'm just doing this as my, you know, this is my personal feeling, of course, so don't take anything I say as rote. So let's talk about down from here. If we were to move further down, we need to go back a little bit, maybe stick on the weekly, I think is a good one. So for me personally, I have that area of the $1,800. That's the big one for me. It's somewhere between $1,800 and this trend line right here. Even though this trend line was broken through, I still think it's in play. Again, that's just a personal feeling and it's not financial advice. So I think if we go back up to the monthly, what could potentially happen, and there's infinite possibilities what could potentially happen. We have that rise up to 2,075, and we might be forming a cup and handle formation where you have a rise. So you have a previous high and then a big low, and then you kind of form the cup right here. That's the cup. See there, and up and then back down as a potential fake out, and that's the handle right there, the cup and the handle, and then it just continues on its merry way up. I'm very bullish on gold fundamentally over the next, you know, coming years. So I think it's more likely that a cup and handle could be formed, but obviously don't you know, take everything with a grain of salt. But for me personally, this level here of the 1800 would be the line in the sand for me to say it's definitely, you know, bouncing off there and going to continue higher up from there. So if we break, I would say anywhere to, if we break through 1800 and we go back down to about 1750, anything lower than 1750 for me would then be saying, yep, cup and handle's probably not going to be the case. So I think 1800 for me is the 1800 to 1750 is the line in the sand, but I think because that's a previous big level of resistance, I think we will see 1800 as the level of support. That is me personally. If we were to move down further from here, or if we break down a little bit, it just depends. I think we would butt up against this trend line, so that just depends on when it might happen. So bit of a room to move down if we are moving down, and I think it'll be around about your $1,800 level, and breaking further through there. As I said, that trend line may be $1,750, but for me, more likely to be that $1,800 level. And let's talk blue skies. Let's assume that the price is just going to continue back up from here. You want to get back through the $2,000 level, although it's a psychological value which has already been broken through, so I wouldn't see it too much as a psychological level. Maybe we could do a quick bit of Fibonacci just on this smaller time frame. Let me check this out. As you know, I do this all on the fly. I haven't really taken a look at this chart for a little bit. So if we take that high and that low, where would be some key Fibonacci levels? Where would be a key resistance level? It would be at the 61.8, which is right here. And you can see, check it out, right there was a significant level of resistance. So we came down to that 1860 level. We broke up, back down, then it's been a level of resistance. So I would say that's pretty darn close. So I'm going to say that level here of about, yeah, let's call it the $2,000 level. Yep, we will call it the $2,000 level. Might be another area of resistance right there. If we were to break up higher, that we might be knocking on that door a couple of times. But the more you knock on the door, the more likely you are to break through it. And moving higher, of course, you've got the previous level of 2075, but I think we'd break through that pretty quickly if we were to continue the uptrend. And I've talked about in the last video from about a month ago, the higher targets, and we can talk about those if you didn't see the previous video. And some of you may not have, because we've had a lot of new subscribers since. So some of you are actually watching my analysis for the first time, so welcome. Moving higher from here, the next significant level I've been talking about moving higher in the gold price is this Fibonacci level. And a lot of you have seen this before, so my apologies to all the OG subscribers. You've seen this, but we take the high here, the previous high of 1920, and the low back in, I think it was February, something like that, of December of 2015, November, that low of 1050. We take that high and that low, and it gives us these Fibonacci lines, and the 1.618 Fibonacci based on that high and that low is at $2,460. I think you could comfortably just call that the $2,500 psychological value. So that's why you can see that 2460 level there, and I just drew in that horizontal line to indicate roughly $2,500. That's the next big one where I think we would be going to before we see another, decent dip in the price. So that's my call moving down. I think 1800 is going to be the low. That's just for me. Don't base any of your trades or any of your buys and sells on that in terms of buying the physical. Just buy the physical. You really should be thinking about dollar cost averaging rather than trying to pick the exact bottom. But that's my feeling. Around about your 1800, I think, is the line in the sand for me. And then, of course, moving higher. This is down the track, but the 2460 to $2,500 level moving higher. That is gold. Let's take a look at my friend silver. Silver is very much my friend because I'm pretty much, as I've said to a million clients before, I'm pretty much all silver in my holdings. I think it has a very good chance of outperforming gold over the long term, and I think a lot of you are thinking the same thing. I do own a little bit of gold, but it's not much of my portfolio. Still, it's a great investment to have. Just depends on your risk reward profile. It depends, on your age and that kind of thing as well, how much are you willing to risk. So silver might be a bit of a slightly larger risk, but I think it's a much larger reward in the longer term. So if you've got the stones for it, then I think taking a look at silver is a great idea. Okay, now I'm rambling. Here we are, silver. I had been talking about the maximum I thought we would go to, and we hadn't yet hit this top of $30. I was talking about three separate points. I was talking about where we could top out at. I was talking about here at the $30.70 mark. Well, I said I think $30 to $30.70. Then I said here at about 32, and then I said here at 35. That's going to be a very large one. I think when we hit that eventually at 35, but we only topped, I say only, but we topped out at around about $29.80, and since we've had that move down. So if I take a look at this on the, not on the daily, I will take a look on the weekly. On the weekly, we had the move all the way up to around about $30, and then that big move down to almost back down to this level here of that $23 mark. And that was coinciding with, the $23 mark was coinciding with this previous little resistance point. That's why I had it drawn in. Almost down to the $23 level, back up through time, just like gold, through time. It was ranging through time, and then you could have drawn in that triangle pattern, but it did break down to the downside. 23.70 so far is where we've come down to. Again, the question is, are we moving higher or lower? I don't know, but let's talk about the potential moves lower. If we're moving lower, look, there's room to move down, and you're definitely going to, you can see it right here. I'm sure you can all see it. This definite level of support right there at your 21.20. That's the big one in my opinion. Also happens to coincide, well, with a couple of things you can see right here. This trend line, which I think still might be in play, but then it also potentially coincides with the 18 average of highs on the monthly time frame. The best way, in my opinion, is you don't look at, and this is pretty obvious stuff, but you don't look at the smaller time frames. You don't look at the shorter time frames like the daily, particularly, or the 4-hourly. For the big trends, you want to look at the big time frames. So you want to base it on the weekly and in particular the monthly as well. So I do find the weekly and the monthly 18 average of highs and lows good indicators for the longer term, particularly the monthly. And so that's a interesting focal point right there. You've got a big level of resistance, which could become a big level of support. You've got this trend line right here, not so much in play, but I'm gonna keep it there for now. And then the 18 average of highs, because what tends to happen, doesn't always, what tends to happen is you have a big rise above the 18 average. It comes back to visit it. Then you have a big sort of parabolic move, and then it comes back to visit it at some point. Although with this one, then it just kept going down and down and down. But it does happen to be a level of, some kind of support. So I think that where are we? Right there, $21.20 US cents. So $21.24 US, that is, could be a level of support on the monthly time frame. When we hit that, I don't know. Could we have a big spike down and then just continue up in the next 8 or 9 days it is until the end of September? Or could we sort of range in an area, and then the October becomes the October red month, red October, hunt for red October, there we go, the hunt for red October in the monthly silver price. So could potentially October be a red month as well, a down month? That's quite potential. It wouldn't surprise me at all if we had a red candle next month. I'm not saying it's going to happen, but if it does, wouldn't surprise me at all. And 21.20 would be my level of support right there. So moving higher again, blue sky thinking, this would be a level of resistance, that $35 level, although it's not a huge, when you take a look at it, it's not a massive difference. It's not a massive run up moving higher above this $30 level. I mean, it's $5, but it's still, when you look at it on, say, breaking this level here, that's a big rise between here and here, up to $30. Between here and here to 35, it's actually not that huge, but look, it's pretty significant. It was a very significant level of resistance, and it's also the 61.8 from the big high of $50 and the big low of $11.60. So yeah, I'm going to call 35 would be a level of resistance. And look, moving higher, you're going to have $44 roughly in US dollar terms, and of course the big one at $50. That's my call on silver for the moment. If I was leaning in a direction, I would lean to the downside. I know I don't like to give my percentages, but look, if you had to put a weapon to my head, and I would suggest that we may see lower prices before we see higher prices. But please do not do any trades based on that. If you know you want to buy, just buy. dollar cost average in is the best way to go. Don't wait for the perfect timing, as I said before. But if I had to absolutely have to say, I would suggest potentially, another red month potentially coming, if not sooner. But 21.20, as I said, so that's silver. I'm not taking a look at gold or silver on the Australian dollar time frame this week. My apologies to the people who really want the Australian dollar, but sometimes I have the time and sometimes I don't. So we're just going to stick with the US dollar price for the moment. And as always, if you're first time watching this, it really does depend on what the Australian dollar is doing against the US dollar. To give you an example, we have been strengthening AUD, USD. Recently, we have been strengthening against the US dollar. So it really does depend what that is doing as to what the Australian dollar spot price is doing, if that makes sense. So skip that for now, and we'll go to look at all these tickers right here. Let's see, XA, X is after, yeah, there we go, XA, G, AUD, no, I want XPT, sorry gang, XPT right here, good old platinum. Let's see what's happening. I'm looking at this for the first time in quite a bit actually. There you go. Interesting. All right. Look at that. Cool. All right. So I've had all these lines drawn in previously. If you go to the previous video, the last analysis, you'll see that these lines were already drawn in. I have not added any more or removed any. You'll notice a few trend lines right here. That's very interesting, isn't it? Okay, cool. You've got this big trend line right here, and you've got this other trend line right here. What it seems to have happened is we've come up from this low. It was a failed breakdown, or we had this support level. Sorry, not a failed breakdown. We had this support level at that 790, which I'd obviously drawn in a line previous, and a big rise from 790. This is again on the US dollar time frame, all the way up to a high of $1,007. Look where it's landed, right here on this particular trend line. See, all the way through. Isn't that interesting how trend lines work, hey? And then we had a dip all the way back down to the 850 level. That's a big one that we've been talking about previously, and that happens to coincide with this trend line right here. Well, there you go. Let's look on the monthly time frame. Where are we? On the relative, was it the stochastic RSI, or is this the relative? This is the stochastic RSI, I believe it is. We are still in sort of neutral territory. We're starting to move into overbought territory, but not there quite yet. And this again on the monthly time frame. If we were moving down from here, if this is the big move and we're moving down, technically we didn't post a higher high. It did not come up to the $1,050 level. If we are moving further down, you would see definitely the $790 level as an area of support, and possibly this trend line right here. It just depends on when it was going to hit. So I would say around about 790, or this trend line would be your big level of support moving down from there. Let's just call it 790 for the moment. That seems to be a big one, in my opinion. But if we're moving higher from here, it looks pretty positive, I must say, actually. Where would we be moving up to? I think that wouldn't be much of a level of resistance. So I think the next level moving up, and I'm going to remove this for now. The next level moving up, I would be confident to say the next significant level of resistance would be this trend line right here, the big one. If you can see the big macro trend line right there through the old high, a couple of old lower highs, I should say, right down to there. So if we have, what's on the monthly time frame, if we have a few months of green candles, I would see this as a definite level of resistance, and it just depends on when it hits. So you can just pause this. You can take a screenshot of this if you want to. Take it on your phone. If you want, you can have that for a point of reference, but it would hit against this trend line. If it did it in the next, let's say 1, 2, 3 months, if we had a 3 green candle months, then it would top out around about $1,120. And if it had a little spike above, then obviously you're talking this big significant previous level of resistance at the $1,190. So hitting this trend line right here, or moving up to the $1,190 level. I won't talk about the levels moving higher because it's going to be in a number of months' time, and so I'm going to be doing price analyses way before then, assuming we're not really busy in the store, which is just getting busier and busier. So that is platinum, my low target, and platinum, my interim high target. And lastly, we'll take a look at XPD, good old friend Palladium. Look at this one. Okay, let me get into the weekly time frame. On the weekly time frame, interesting. The weekly time frame, we're in the overbought territory. There could be room to move down. We have, let me check this on the good old Fibonacci. What have we done here? So that's where we topped out back in, where was that? Back in when we talked about it, yeah, February this year, roughly February, yeah, that was February, 2,870. Then we had that low point down to, all the way back down to about $1,500. And what do you know? Okay, if you can see this right here, I know there's lots of colors going on, but if you can see these lines, the 61.8 at $2,350 calculated from this high and this low happens to coincide right here. We came right back up. It was a failed move, so failed move to break higher, so a fast move in the opposite direction, all the way back down to 1750. We consolidated through time for a bit, and then we broke through this trend line. We had this drawn in, and then it broke through, and then a quick move up, and back up to a significant resistance level at the 61.8 Fibonacci level of 2,350. Well, what do you know? And if we take a look on the daily, even more interesting, there we go. After we came back up to the 61.8, we had a sell-off all the way back down to, what do you know, the 38.2 Fibonacci level, again, of the Fibonacci that I just drew in just then, calculated from that high and that low, and that was at $2,025. Very interesting, the old Fibonacci. It's a pretty good predictive tool. On that, again, if you're just watching these for the first time, on predictive tools, it's not that, in my opinion, it's not that they're not soothsaying materials. They're not actual predictive tools. It's more the opposite. It's the chicken or the egg. It's about the psychology. So if enough traders, if enough people out there in the world believe that Fibonacci is a good predictive tool, then they will make trades accordingly, which then happens to take the price there. Does that make sense? So it's a self-fulfilling prophecy. That's what I'm trying to say. That's why Fibonacci is amazing, because a lot of people think it's amazing, but that's because they're doing their buys and sells and their trades based on that, and it actually makes the prices go there. A self-fulfilling prophecy. Hope that makes sense. So we broke up to the 61.8, broke back down to the 38.2 of 2025, and since we've been in a moving higher range to around about 2,420, and we're finding a level of support right here. And I had that drawn in at 2,250. Because when did I draw that in? I must have drawn that in a number of months ago. Must have been based on this level of support right there. And that's, as you can see, a level of support. Again, let's talk about moving lower, and we'll talk about moving higher. Thanks for your patience on this, everyone. Bit of a rambly one today, but I really appreciate you sticking around if you have. You're the true winners, the ones that stuck around. If we move down further from here, what I could potentially see is, you would see definitely here, if you can see that, I'll even draw in a horizontal line. You can see this level right here as a level of support, and that's at the 38.2. So just for, there we go, I'll just draw that in as well, 38.2, and that's around about your $2,025 level would be a level of support, in my opinion, moving down. The next one would be at the 23.6 at the $1,820 level. As you can see, that's a significant support level right there as well. A few hits as a level of support. And then moving down from there, well, you'd be talking back down here at your $1,500 level. If the bottom's just, falling out of Palladium and we just move lower and lower. So those are my targets, moving lower. basically based on the Fibonacci levels with this extra level here of $1,500. As you can see, it was two previous levels of resistance. Moving higher, let's see where we have to go to. So we've got this level right here. I call this the 78.6. I'm going to base this all on the Fibonacci from this high and this low for the moment. So this next level right here at 2,575, I think would be a level of resistance. If we move higher, then we'd have a little bit of a dip. Then the next significant high would be the previous all-time high of 2,880. And let's just blue sky think for a second. Let's take this out on the monthly. And we'll talk about the next move higher, where it could potentially go to. Let me get rid of all this stuff, and I'll get rid of that. I know it's a lot of lines. I do have the big previous Fibonacci as well, so we'll talk about those two. Let's talk about the Fibonacci moving higher from this smaller one, then we'll talk about the macro one. If we were basing it on the 1.618 or the 2.618 from this high and this low, you're talking at a high of around about $3,735 to $5,000. Again, this is talking on the, we're talking on the monthly time frame here. So we're talking, if we have a huge bull run and it's consecutive bull run over a number of months, then we'd be talking about those kind of highs. So definitely not saying it's going there. We're just, again, blue sky thinking. And if I base it on the big macro Fibonacci of the old high of $1,085 and the old low of $144. Can you imagine buying Palladium at $144? Let's see. So we had been previously talking about, I'll get rid of this one right here for the moment, just so you can see. I'll get rid of that for the moment. We had been talking about the fact that we had come up to the, or close to the 1.618 of 1,667. That's this high right here. And then we came up very close to, or sort of hovering around the 2.618 at about $2,600. That was a level I thought we would potentially top out at. We just moved a little bit higher than that, a couple of $100 higher at as I said, $2,880. But the next Fibonacci level based on this macro would be the 4.236, and that's at a $4,130 level. If we were to sail right through there and go to the next one, again, that's based on this significant high, this significant low, then you'd be talking about $6,500, $6,600 level. Again, that's on the macro sort of look. Again, we're looking on the monthly time frame. So those are the targets. Which ones would I favor? The smaller one here or the larger one? I'm going to go with the larger macro, is the one which I think would be more predictive, again, based on this high and this low. If you have your own Fibonacci predictions, based on a different high and a different low, or any other things that you think, are a bit more predictive than my own ones, please let us know in the comments. I really want to hear, because again, this is just my personal opinion. I don't claim to be an expert at all, so I'm willing to hear from people who know more about this than I do. So give your own opinions as well. Pop comments underneath this video, of course, on the YouTube channel, hitting the big red subscribe button right here, because you know what, we are a huge family. We're becoming a very big family, 7,300 and something subscribers. I'm going to leave it at that because it's about to pour down here, and I'm going to get drowned out by the noise of the rain on the windowsill. So take it easy, be well. Of course, like, share, subscribe, and head over to bullionnow.com.au to get all your best bullion bars and coins shipped to you worldwide from Melbourne in Australia. Exciting times ahead. Stay safe, take care, and we'll speak to you soon.